Can you imagine turning $10,000 into $32,000 in just a few months? Many people can't imagine that, but CoreWeave stock investors can, and most of them have. We can see if you invested in CoreWeave in April of 2025, those $10,000 have become $32,000. Now, if you were able to sell at the peak, those $10,000 were actually closer to $45,000. Now, luckily in this channel, we did talk about CoreWeave in April. I also did a video when I purchased in those $40 as well. And now I am going to say I have sold off a good portion of my overall position where I don't own much. But now with earnings coming up, I am curious to see if I should get back into the stock or if I should put my money elsewhere. So let's take a closer look at what the market is expecting.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so we can see CoreWeave right now sitting at $129.55, up about 223%. Unfortunately for CoreWeave stock investors, it hasn't been an easy ride. We can see in just a few months of IPO process, this stock has seen numerous 40% drops, yet alone 30% drops. Right now, the stock is down roughly 29.3% from its all-time highs. So this is a highly volatile stock that is almost touching 50% drops. We can see here in April of 2025, it saw about a 45% drop. Here we can see it as well in July, and throughout various time frames, it saw multi-double digits percentage drops. And I do believe this volatility is going to continue throughout the near future. Now, throughout this episode, we're actually going to look at a lot of estimates for this quarter and the upcoming quarters, which would be the guidance that they would give us, and kind of just share my overall thoughts. Now, if this is your first time here, you're going to see I'm going to be using a lot of charts from fiscal.ai. You can get a 15% off promotional offer at fiscal.ai/Jose. This is the best data platform for any investor. Definitely check it out. So first, we're looking here at revenue estimates, and revenue estimates for this is actual numbers for March of 2025. So last quarter was around $980 million. Now, what analysts are expecting of the overall consensus for this upcoming quarter, which is going to be the June 2025 quarter, it's about $1.08 billion. This is actually going to be the first quarter this company is going to see a $1 billion quarterly revenue rate. So it's pretty impressive. Now, for guidance for the next quarter, for the September 2025 quarter, estimates are expecting around a $1.25 billion in expectations. Now, the stock has seen a nice pull up, right? And we've seen kind of this massive excitement around the AI space. I do believe for the company to be able to maintain a nice positive trend, both revenue estimates and revenue guidance have to be a lot higher, a bit higher compared to what the market is expecting. Maybe closer to $1.1 billion in revenue this year, and maybe closer to $1.3 billion in guidance for next quarter. Now, this is something I want to mention, is that the growth rate is expected to be dramatic for this company. December, we're expected to have roughly $1.7 billion in revenue. March of 2026, we're expected to have over a $2 billion run rate per quarter. Now, this is what it means to be an investor of CoreWeave. You are expecting these type of growth rates. If any of these expectations are not met, it could come with a lot of volatility. But I do think it is wild that this company has the expectations to have about a $2 billion run rate per quarter starting in March of 2026. Now, if we look at CoreWeave's earnings per share, unfortunately, the company is not making money. It's actually losing money with these earnings per share. For March of 2026, it had roughly a loss of 61 cents. For this quarter, it's expected to be a loss of 20 cents. And for next quarter, it's around to be around there as well, around negative 22 cents as well. Now, the biggest note here is that for the foreseeable future, until mid-2026, this company is not expected to be profitable. Now, any change in that, maybe a further downstream on that, could create negative pressure if the company comes out and says, look, we're actually expected to be somewhat profitable by the beginning of 2026. That could create kind of a bullish sentiment towards the stock. But it's important to understand when the market is expecting this to be profitable, at least on a quarterly basis. Now, I want to look at capital expenditure. CapEx is insane. This is now spending billions and billions of dollars of money in NVIDIA AI chips. So for March, which they just reported a few months ago, they spent about $1.4 billion in capital expenditure and CapEx. Now, for June of 2025, they're expecting to spend roughly $3.5 billion, almost a 100% jump. Now, jumping to September, markets are expecting roughly $7 billion in CapEx. That's another 100% jump. Now, the company has guided for a little bit over $20 billion for the full year. So if in quarter one and quarter two, you're only doing 1.5 and $3.5 billion, that means that the second half of this year is going to be very heavy on capital expenditure, especially if you want to reach that 20 billion. We can see that, right? So September, we mentioned we're seeing around $7 billion in CapEx. And for the December quarter, we're expecting about $8 billion in CapEx. Now, this is something that investors are going to want to pay attention during the upcoming earnings. Has there been any shift in CapEx amount? Has it even grown a lot higher? Has it decreased a little bit? And both could be seen bearish, in my opinion. If they decrease CapEx, the market can see it as a bearish case, because it means that there is some slowdown in the market. Now, if they do increase, then it means that this might push the profitability of this company maybe a little bit further. But it could also be bullish, right? If you see CapEx increase, it could mean that the company just has so much demand that they're willing to spend more and more money. Now, it is pretty interesting that going to jump into March, you don't see that CapEx grow that much. I wonder if market expectations right now are just not there because it's still too early towards this year. And this is pretty much a brand new company, right? So I do want to say, at least for this year, a lot of the estimates are most likely going to be in line to what the company has said in the prior earnings. Now, for next year, I do believe these numbers might be a little wonky. Now, what I think is extremely wild is this company in forms of free cash flow, even though it is doing a lot of investing, free cash flow is extremely painful to watch. For March, free cash flow was negative 1.3 billion. For June, it's expected to be negative $3 billion in free cash flow. In September, it's expected to be negative 6.4 billion as you're investing dramatically. And then in December, it's expected to be even less than that. So this is a company that's burning massive cash, especially at the second half of this year. And that is not something that's going to be sustainable. Maybe it's sustainable right now, but they need to have a clear path that this free cash flow is going to be improving due to their overall business. And I do see this as kind of the major red flag for the company. You can't be investing like you are some form of semiconductor fab and not kind of getting the returns from it as well. Now, while this company isn't making money the traditional way, it is making money the finance way. In just the past 2 months, it has announced various funding. On July 31st of 2025, it closes a $2.6 billion secure debt financing facility to strengthen the market positions as AI cloud leader. And this is to help increase and accelerate the delivery of services for OpenAI and expand CoreWeave's high-performance infrastructure footprint. $2.6 billion, and I believe this is most likely due, I think, early 2030s or late 2020, so 2029s. So there is some time to pay this off. Now, outside of that, CoreWeave on July 28, completely separate to that, announces a closing of $1.7 billion of senior notes due in 2031 at a rate of 9%. On May 28th, the company announced another $2 billion of 9.25% senior rates due 2030. So this company is building a lot of debt, having a lot of negative free cash flow. If the AI market is as strong as it is, and as they say, this is by no means anything too scary. They're investing in growth. Now, if there's ever any hiccup in the growth of AI, if there's any hiccup with revenue recognition, if there's any hiccup with cash flow, it can really impact the debt and the balance sheet that this company has. It's the opportunity. This is a rocket ship, right? A rocket ship. And I mean that in two ways. It's a rocket ship that, if handled correctly and done correctly, it can go to some extra levels. Unfortunately, it's a rocket ship, and if it's rushed and not thought about and the engineers make some mistake, the financing engineers make some mistake, it could blow up, and that could be very bad. And that's what you're playing here with CoreWeave. Now, some other announcements continuing here with updates in capital expenditure on July 15th of 2025. CoreWeave announced that they're going to be investing about $6 billion in data centers in Pennsylvania. The initial 100 megawatt data center, and then an expansion to 300 megawatts as the data center continues to grow. Now, luckily for CoreWeave, we have seen a lot of bullish sentiments. We've seen companies like Microsoft, like Amazon, like Google, all announced that they are extremely supply constrained right now. So that's extremely bullish for CoreWeave. The other thing is all of them are increasing CapEx, so all the other companies are saying, look, you need to continue to invest to dominate in this space. So at least they have that confidence and the evidence that other players are also doing it and that the market is there. So this is pretty cool to continue to see the adoption. And we see AI models continue to grow. We see OpenAI still doesn't have enough AI GPUs to continue to expand its inference solutions, its overall training solutions, and the list goes on. You have other players as well, XAI, a lot of AI companies continuing to innovate. So again, there's also that bullish sentiment as well. To me, the biggest thing is just any slip up with that heavy financial debt, with that heavy free cash flow burning, it could create an issue if things go south. Now, the company has also made a few acquisitions, and this is going to be a question, especially with a lot of the headwinds that are happening right now. So on July 7th, the company announced that it was going to acquire Core Scientific, ticker CORZ. Now, this is going to be all stock-based compensation of newly issued shares. So CoreWeave continues to dilute shareholders, continues to add more debt to the balance sheet. And this is going to add more power and gigawatts and data centers to CoreWeave. So theoretically, the acquisition makes perfect sense. It does make perfect sense for me. CoreWeave was already being the biggest customer of Core Scientific. Why pay a margins to a company if you're pretty much their whole inventory? Might as well just acquire the company and no longer pay that middleman fee. So the acquisition makes sense. Now, unfortunately, because this is at a fixed rate, the merger faces headwinds right now. CoreWeave's stock price has dropped about 30%. We saw post-announcement, reducing the effective deal value for Cores from $20 to around $13 per share. There is no price collar or cash components to protect against further stock declines. Now, shareholder law firms are investigating the transaction fairness. Now, this is expected to happen, I think, at the end of this year or early next year. But right now, investors, of course, are not that excited, especially since CoreWeave stock has declined. Now, I'm going to say if the other way was happening, if CoreWeave stock price was increasing dramatically faster after that announcement, all Core's investors would be saying yes to the deal. So this is going to be a headwind, but it's also going to depend on how the stock price is to see how Core's investors feel about it. But any update here from the company would be very crucial. Now, a non-public acquisition, we can see in June 18th, CoreWeave, on May 5th, CoreWeave completes an acquisition of Weight Bias. Now, this is a company to increase their software solution as a platform in the AI space to no longer just be kind of just the bare metal style, to provide a little bit more AI capabilities and AI software capabilities. And throughout the upcoming months on June 18th and July 16th, the company did make some announcements of new products and being available in places like AWS Marketplace. So great acquisition there as well. So while I'm not a fan of this type of debt buildup, I do believe management is doing smart acquisitions and acquisitions that make sense. And they're also investing in kind of their core AI data center solutions. So that's actually pretty helpful. Now, some other interesting things is CoreWeave does tend to have a really great partnership with NVIDIA, and they continue to flex their muscles. On June 4th, they were the largest ever ML perf results on GP200. So it kind of showcased that, look, we're able to build clusters super quickly, and that allows you to make sure that we get the big customers first. Because in this AI space, if you're able to have a lot of chips connected very quickly, you're going to have a lineup of customers willing to sign long-term contracts. And that was more of kind of just social media, not a social media, but an advertisement ploy. It showcased that they are able to build clusters super quickly and very reliable to kind of submit some amazing results. Now, another thing, on July 3rd, CoreWeave becomes the first hyperscaler to deploy the NVIDIA GB300 platform. This again showcases that, look, we are one of the first companies. We are the first companies to deploy new NVIDIA solutions. So if you want the best NVIDIA solutions, you have to make sure to join us here with CoreWeave. Now, there are some drama. There is some drama. The biggest drama with CoreWeave outside of the course drama, outside of the massive debt and massive free cash flow drama, there is the final drama of IPO lockup expiration. And that's expected to end around September 24th of 2025, so about 180 days after IPO. And this is when a large percentage of shares become eligible to be sold. And this is an important catalyst, as if you do start to see a lot of insiders unload shares, you're going to see a massive negative trend towards the stock. So I'm actually pretty curious to see during this lockup IPO, once it expires, that could create a lot of volatility for the stock. So I mentioned I still own some CoreWeave share, but a majority of my position is closed. And luckily for me, it was a multi-bagger, extremely multi-bagger. Now I'm debating with the recent pull-ups and earnings coming up, should I reinvest in CoreWeave? At the moment, I think my answer is no. I believe this is highly volatile and I would rather wait it up. And there might be other opportunities. I have recently opened up a position in Nebius, a very small position after their earnings. And I'm debating if I should take a lot of my CoreWeave results and put it into Nebius instead. But right now, CoreWeave is not on the top of my list due to the high volatility, due to the high free cash flow burn, and due to a lot of the kind of drama, especially with the IPO process. I am going to say, I believe with the stock gone up so much, insiders will probably sell off a nice amount of positions, which could create some negative pressure on the stock, especially during the late September era. Now, this doesn't mean the stock price can't go up, right? If it goes up, that's okay. But for me as an investor, I look at my risk to reward ratio. If the risk is too high, it doesn't mean that the stock is going to go down, but it means that I'm not willing to put my money into the stock right now because it's just that risk is too high for my favor. But at least now as an investor, you know what's happened throughout CoreWeave in the past few months, and you know exactly what the market analyst consensus is at the moment. So take care, have a good day, and see you all next time.